Good evening, America. Tonight, we're facing a stark reality check amid the champagne toasts on Wall Street. The United States has just crossed a breathtaking threshold. Our gross federal debt has surpassed $38 trillion this week. That's right, $38 trillion. To grasp the scale, that's about $111,000 owed for every single American, or $287,000 per household. And it's ballooning by nearly $7 billion every single day. The folks at the Peterson Foundation put it in even sharper relief. This mountain of red ink rivals the combined economies of China, Germany, Japan, India, and the UK. Yet, here's the split-screen irony. While we're drowning in debt, the markets are partying like it's 1999. Just yesterday, all three major indexes closed at record highs, with the Dow Jones breaking ground above 47,000 for the very first time. It's a euphoric ride that's left many wondering, how long can this last? This haunting disconnect feels eerily reminiscent of the late 1920s, an era of unchecked greed, incompetence, and corruption that Andrew Ross Sorkin chronicles so vividly in his new book, 1929, the defining story behind the crash that shattered a nation. Sorkin, the acclaimed New York Times financial columnist, Dealbook founder, and CNBC's Squawk Box co-anchor, draws clear parallels to today. Back then, rampant leverage and speculation fueled a bubble that burst spectacularly. Fast forward to now, we've got extraordinary debt and credit propping up the AI-driven stock surge, masking cracks in the broader economy. Sorkin warns that while a crash doesn't have to spiral into another Great Depression, it could mimic the dot-com bust of the late 90s. The $38 trillion elephant in the room makes it far riskier. In a downturn, the instinctive response would be for the Federal Reserve and government to pump in more cash. But with bondholders already financing this debt, what happens when they balk? They could demand sky-high interest rates, triggering a vicious spiral. So why aren't the markets panicking over this fiscal abyss? It's a head-scratcher, even to experts like Sorkin. Part of it is relativity. The U.S. economy still looks like the cleanest shirt in a dirty laundry pile compared to the rest of the world. Investors flock here as the safest bet. Plus, let's face it, most pros are wired for optimism. History shows that betting on the long haul, a la Warren Buffett, has paid off more often than playing scared with cash under the mattress. But Sorkin isn't just sounding alarms. He's urging vigilance. His book isn't a doom prophecy, but a deep dive into the euphoria of 1929, where leverage ran wild with zero guardrails and precious little transparency. Today, as those same barriers erode, it's a reminder, humanity's eternal chase for more, think Gordon Gekko's infamous line, can blind us to the abyss staring back. And speaking of that abyss, the 1929 crash wasn't just Black Thursday's one-day bloodbath. It was the first domino in a chain reaction of boneheaded policy moves under President Hoover, hiking taxes at the worst moment, slapping on Smoot-Hawley tariffs that choked global trade, all while Hoover honored a campaign promise to farmers from 1928. The Depression didn't hit overnight. It unfolded through missteps that turned a market tumble into national catastrophe. As Sorkin puts it, understanding that history isn't about predicting the exact timing of the next fall, it's about spotting the warning signs and asking, are we heeding them? Viewer Rick Nash summed it up bluntly on social. The cuts needed to curb this debt will never happen, so I'll just ride the stock gains. Fair enough, but at what cost to our kids and grandkids? We're mortgaging their future while toasting Dow records. How do we square that circle? For now, the highs continue, but the debt clock ticks louder. 1929 is out now. A must-read for anyone who wants the full, unvarnished story. I'm your name, and we'll be right back after this.